What's happening, YouTube? It's JD Trades. I'm back again with a market breakdown video. Today, we're going to cover a gold trade setup that I did post inside of my Telegram. Link to the Telegram's in the description box down below. Just join. It's completely free. As always, don't forget to leave a like, comment, and subscribe. Turn on that post notifications to get notified whenever I post a new video. So let's talk about it. We had CPI data come out today. Right. Now, in terms of the dollar, we actually saw CPI have a slight bit of an improvement. However, CPI or the inflation, sorry, has only, gotten better by 0.1%. So, we did initially get a push to the upside on the dollar, as you can see by this 5-minute candle, but eventually we did falter to the downside. Okay. Now, ideally, the main thing that I did see for gold was the fact that we did take out today's high. Okay, so we took out London session's high. Okay, so London session opened here. Okay, we pushed up throughout London session, made the high of the day, and as the news came out, we took out the high. Okay, and as I expressed to everyone inside of the telegrams, like, look, guys, you know, I believe gold can come down lower due to the fact that I've been able to identify where the liquidity resides, okay, and identify what price has done exactly. So we pushed down, we had another rally to the upside, okay, and we started to falter down lower, okay. Now, someone inside the Telegram did ask about which entry strategy I use for gold. Okay. So I do have different strategies I'm going to use depending on the setup, the scenario that market is currently printing and giving to me, and then I will act accordingly. Okay. So what I'm going to do for you guys is I'm going to share the Telegram. Okay. So you guys should be able to see the Telegram now. As you can see here, okay, just taking out this morning's high on gold. I believe gold will head down lower for now. Okay, and this was the setup here, right? Which is the one I've just showed you guys there. Okay, so let's come back to the main chart. Okay, so as you can see here, we saw price pull back up into the area. Okay, we held the imbalance quite well before price started to move away. And, I want to tell you guys something, and it's about understanding that you don't always have to be the first in every move. Sometimes this will depend on your level of expertise, your level of experience, because, if you have been in the game as long as I have, and as long as, a lot of other traders have, you understand that CPI and all these high impact news such as NFP is best to stay out of the way. However, there's nothing wrong with you participating in the market by monitoring a potential trade setup. There's nothing wrong with it as long as you're not pushing any buttons. Maybe if you are someone that needs to push a button, open a demo account, use your demo account to place those trades and those positions. But we can see here that price started to come down. Okay, from that setup there, we had one more test of the imbalance slash this 1 minute up candle, and then we saw price head down lower. Okay. However, we can see here that we did have a slight bit of consolidation, which is, natural for such a high impact news such as the inflation data. But eventually we did break to the downside with gold pushing all the way down lower. Okay. Now, I'm going to remind you again, what was the framework? What was the understanding behind taking this setup was what we saw happen during CPI. Okay. During CPI, we saw price take out this today's high. Okay. The daily high that we made, we took it out with a very swift move and we pushed all the way back down to the downside. Okay. So any liquidity that was resting above these highs have now been grabbed. Okay. If I turn our attention over to the 1 hour time frame as well, you can see from a higher time frame perspective as well, we do need to, of course, pull back and have a retracement to take out all of these lows that price has left behind. Okay. Now, will we come all the way down here? 2410, we're yet to see. But for the time being, especially with this wick and how it printed throughout that hour was perfect. Okay. Everything that we look for in terms of identifying liquidity of course, you need to understand that there are going to be liquidity resting above old highs and old lows, but also understand that what is the framework? What has gold been doing for quite some time? We've just been bullish. We've had some slight consolidations here, a slight consolidation here, but it's been a continuation to the upside. Okay. Now, from the daily picture, from the 4 hour picture, can we pull back? Yes, of course. Okay. Now, with this, we are now starting to pull back. The right imbalance is lower, where we can start to see where gold may potentially get all-time highs from once again. Because I do believe gold will hit all-time highs once again. We'll just have to wait and see how that progresses. Okay. With the inflation data coming down a little bit, there's also a lot of talks of the Fed decreasing the interest rate as well for the dollar, which of course did have a bit of a positive impact on the dollar. Okay, there's a lot of speculation that the Fed will decrease their interest rate by either 0.25 or zero point 0.5 basis points, but we'll see how that plays out. Okay, so there's a lot more confidence in the dollar, so this would explain as an additional explanation to why gold has come down today. Okay, so not only have we covered the technical aspect of this gold trade, but we've also covered the fundamental aspects of this trade. Okay, guys, if you enjoyed this video, you found it helpful in terms of education and furthering your understanding of the markets, just leave a like on the video, subscribe, and also don't forget to turn on that post notifications. And as always, remember the theory behind the practice, and I'll see you guys in the next one. Peace.